Well, hello everyone, and welcome to Momentum Channel. Today we're going to be talking about three high quality, high growth dividend paying stocks that are perfect for investors looking for dividend, passive income, as well as the high growth potential. Let's get into it. Our very first pick is a company no other than Starbucks. Starbucks operates as a roaster, marketer, and retailer of a specialty coffee worldwide and is based in Seattle, Washington, founded in 1971. Starbucks is traded on NASDAQ with ticker symbol SBUX. It has a dividend safety score of 67, marking it a safe dividend pair. The dividend yield for Starbucks is currently at 2.29%. The last trading price for Starbucks is at $85.73, and the stock has a beta score of 1.15. Beta is a measure of volatility, and a beta score of more than 1 suggests more volatility than the overall stock market. From a market capitalization perspective, Starbucks has a market cap of $98.4 billion, marking it a large cap sized business. It is worthwhile mentioning that Starbucks last increased its dividend back in September of 2021, whereby it increased it by 8.9%. Looking at the dividend history in terms of the dividend growth for Starbucks, it is worthwhile mentioning that over the past 5 years, Starbucks has increased its dividend annually by 17%, and in the past 10 years, it's increased it annually by 21% on average, both of which suggest to a very fast dividend growth. They do currently have a dividend payout ratio of 62% and a forward payout ratio of 62, both of which may sound high. Nonetheless, it is hovering very close. That's up to 60% dividend payout ratio, and we consider it to be a reasonable payout ratio here. It is worthwhile mentioning that Starbucks has been paying and increasing its dividend uninterrupted for the past 11 years, as showcased here. They do currently pay an annual payout of $1.96 per share, and their dividends are paid quarterly in the months of February, May, August, and November. Looking at the timeliness of the stock for Starbucks, you'd notice that their dividend yield is 13% above their own 5 year average, indicating that it may be undervalued at this time. On top of that, their forward price to earnings ratio, which is sitting at 27.2, is slightly less than their own 5 year average, though hovering very close to that. As for their past 1 year price, the last trading price of $85.73 is hovering closer to their 52-week low price of $69.90, and definitely way off from their 52-week high price in the past 1 year, where they hit $119.34. Although their forward price to earnings ratio is higher than that of consumer discretionary, which is at 13.7, it is worthwhile mentioning that Starbucks is hovering close to its own forward price to earnings ratio 5 year average. And on top of that, investors are willing to pay that premium for a high quality business that has a wonderful track record and growth potential. In this case, if you look at their earnings per share, except for 2020, that year of pandemic, whereby the earnings per share got hammered badly, there onwards, they've actually nicely recovered, especially in 2021, with the last 12 months showing $3.15 in earnings per share, and the next 12 months estimated to have similar numbers. Looking at their total sales in $1 billion, you see how over the past 10 years, they've nicely actually managed to more than double their revenue, with the last 12 months showing $32 billion in total sales. In the meantime, they are buying back their own shares, which is always a positive sign for dividend investors. This way, as you notice, since 2012, where they had 1.55 billion outstanding shares, they've now decreased it to 1.17 shares outstanding in the last 12 months in billion. And lastly, if you look at the operating margin here for Starbucks, which is a measure of profitability that divides operating income by total sales, although we would like to see a threshold of 16% for restaurants and businesses alike, for the most part, this business, Starbucks, has been able to hit that threshold. The exceptions are the years like 2012, 13, 18, 19, and so on. That said, it's not a big red flag, given that the business is managed to continuously increase its sale, has been able to continuously put outstanding earnings per share numbers. For instance, if you look at it, in all those past 10 years, they've managed to year after year increase their sales and their earnings per share. The only exception was in 2020, as we pointed out earlier on. Now, looking at the stock return for Starbucks, this could be of interest for investors. The 1 year return for the Starbucks stock has been nothing but short of kind of horrific, and the stock has been down by 28%. That said, sometimes when the stock does perform poorly in the short term, it actually might provide a wonderful opportunity for investors who have a longer term horizon, as long as the fundamentals of the stock hasn't changed and their growth prospect for years to come has not been impacted negatively. If you look at the longer term horizon, then this short term decline may not be too much of a worry. Like you see some similar patterns back in the pandemic years, whereby the stock got hammered as well, but then nicely recovered and rebounded ever since. In the 5 year time horizon, you see the stock is up by 57% plus. And even better, if you look at the 10-year time horizon, the stock is up by 276% plus. Just incredible. Now, if you look at the longer term horizon, going as far back as 30 years ago, in 30 years, the Starbucks stock is actually up by a whopping 22,400%. Just insane and incredible return for this business and its stock. With that, let us move on to our second pick, which is FedEx, an air freight and logistics business with ticker symbol FDX. FedEx has a dividend yield of 1.96%, just shy of 2%, and it was last traded for the price of $234.89. It is a large cap business with $61 billion in market cap. From a volatility perspective, FDX stock has a beta of 0.98, suggesting average level of volatility. It's impressive how FedEx increased its dividend last in June of 2022, where they increased it by 53%. Just insane. And add to that the fact that they have such a low payout ratio. In fact, only a payout ratio of 16% and a forward payout ratio of only 20%, giving them a ton of room to continue to grow and increase their dividends rapidly, as you're seeing here. In fact, the dividend growth history showcases how much of a fast dividend grower FedEx is. In the last 5 years, they've increased their dividend by average of 15%, and in the last 20 years, they've increased their dividend by average of 23% per year. This could be amazing pick for investors who are looking into kind of lock in the prices at this time and sitting on that wave of continuous rapid dividend growth for many years to come. They did maintain their dividend, if you look at it, between 2019 and 2020, and that's how they kind of stopped a longer streak of dividend growth. That said, they made up almost for that in 2022, where they increased it by whopping 53% last time. They have a dividend payment history of 20 years without a reduction, and in the last 2 years, as pointed out, in 2021 and 2022, they've increased their dividend year after year. FedEx does pay its dividend quarterly in the months of April, July, October, and December, which comes to a total annual payout of $4.60 at this time. From a timeliness perspective, if you look at it here, you notice that their dividend yield is 62% above their own 5-year average. And they also do have a lower than usual forward price to earnings ratio, all of which pointing out to the stock being undervalued. And it could be a decent time for investors to buy into this stock. As for their 52-week price range, the last trading price of $234.89 is hovering a little bit closer to their 52-week low price. Their 52-week high price, though, in the last 1 year was at $281.66. As for the additional financial metrics, such as earnings per share, you'd see, with the only exception of 2020, they've been able to nicely and gradually increase their earnings. The next 12 months, they're estimated to have $23 in earnings per share. What's more, in terms of their sales, if you look at it, the total sales, you see that nice gradual increase, with the last 12 months showing $93.5 billion in total sales. On top of that, they've been able to buy back their shares with the last 12 months showing 266 million outstanding shares. Definitely less than about 10 years ago. And lastly, if we look at return on equity, which measures how many dollars of profit a company earns for every dollar shareholders have invested in the firm, we'd like to see a 10% threshold here for majority of the companies. And here, in the last 3 years or so, this company has been able to meet that threshold. In fact, since 2021, 2019 and 2020, they failed to reach that. And so did they in 2015. But other than that, they've always, in the past 10 years, had a return on equity over 10% threshold. Let us take a look at the stock return. In the 1 year, we are seeing another negative stock return of 15% almost. But if you look at longer term time frame, in the past 5 years, they're showing a almost 13.5% return. In the past 10 years, they are showing 167% return. And if you look at even longer, since 1992, or the past 30 years, they're showing a cumulative return of 514% return. Just remarkable returns in that sense for a long-term investment option. And lastly, our third and final pick here for high growth dividend paying stocks is an information technology business, Visa, which we all, for the most part, use, and it's used by many merchants and customers throughout the world. It does pay a dividend yield of 0.69%. It may not be the highest dividend yield, but keep in mind, Visa is more considered to be a growth stock in information technology, and many of growth information technology businesses do not actually pay a dividend. In that sense, you're getting kind of a best of both worlds. You're investing in a business that has a lot of opportunity for its growth, rapid growth, yet it does pay some dividends on the side to you. The last trading price for Visa was at $215.87. And Visa has a is considered to be a mega cap business with $414 billion in market capitalization. They did last increase their dividend back in October of 2021 by 17%. From a volatility perspective, Visa has a beta score of 1.09, suggesting average level of volatility. And in terms of the payout ratio, very low at 21% currently and 19% forward payout, suggesting they have a ton of room to continue to increase their dividend for years to come. Looking at the longer term dividend growth history, the last 5 years, Visa has increased its dividend annually by average of 15%, and the last 10 years annually by average of 19%, both of which are considered very fast dividend growth. Visa has been paying its dividends uninterrupted for the past 14 years, and in all of those 14 years, they've increased it year after year. Visa does pay its dividend quarterly in the months of March, June, September, and December, with a dividend coming to an annual payout of $1.50. From a timeliness perspective, their dividend yield is 10% above their 5-year average. And on top of that, their forward price to earnings ratio is currently lower than their own 5-year average. Even though it is higher than information technology, it's always worthwhile for us to use their own 5-year average as a benchmark, because that's how investors of that stock has historically kind of traded and treated this business. Their current price is hovering in between their 52-week low and 52-week high price, as showcased here on the screen. Let us take a look at their earnings per share. You're seeing that nice growth, with exception, of course, being in 2020. That was a outlier year of the pandemic. But other than that, in the next 12 months, they're estimated to have $8 in earnings per share. As for their total sales, you're again kind of seeing that nice upwards trend, with the last 12 months showing $28.1 billion in total sales. And lastly, if you look at their number of outstanding shares, they are buying back their shares nicely, with the last 12 months having 2.15 billion outstanding shares, definitely less than any of the past 10 years, as you see here on the screen. And of course, return on equity, which we talked about, they are well surpassing that threshold and doing a phenomenal job with a return on equity of 40% in the last 12 months, quadrupling what is expected based on the threshold for most businesses and companies. So let us take a look at now Visa's stock performance. In the past 1 year, the stock is down by close to 10%. However, if you look at the past 5 years, they're up by 113%. And in the past 10 years, they're up by 560, almost 69%. If you look at the longer term horizon, as far back as 2008, they're showing that the stock to be up by close to 1,300%. Just insane and remarkable return for this information technology business. Well, there you have it, folks. A quick look into 3 high quality, high growth stocks that are also dividend paying and have a ton of room to continue to grow their dividends rapidly in years to come. I hope you found this video beneficial and gained something of value from it. If you did, don't forget to smash that like button and subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in growth stocks, dividend stocks, penny stocks, and crypto. We also talk about ways to reach financial freedom. Thank you, and I hope to see you next time.